We are going to talk about Robinhood now. The crypto trading platform saw a steep decline in trading volume. According to the company's May operating data, the platform reported a 43% drop in trading volume for crypto when compared to the month before. On a yearly basis, crypto trading volume slowed 68% on Robinhood. Will, I'm going to toss this one off to you. Is this a result of regulation, or is this just because everything is down? Scams are down, rug pulls are down, prices are down, things are just down.
Everything's down. I don't know if rug pulls are down, though. Those seem to always be around.
There was a report that came out. According to a company, they are down.
I'll let you find that in the meantime. But everything's down, right? Like whether your token is down in USD terms or trading volumes are down in exchanges, we are in the bear market. That's how it is. Bitcoin might have bombed in November with the collapse of FTX, but that doesn't mean that things aren't going to languish in the meantime. This is how it goes. One interesting insight was from CoinShares, which is a data team and a asset manager out of the European Union, and said that about $450 million have left crypto over the last 8 weeks. That's outflows. So they track inflows and outflows of capital into crypto, and it's got $450 million, which is a sizable amount of money. And so if you think of trading volumes, trading is also going to start kind of squeezing up. We're going to probably see an increase in stable coin volumes. We're going to see an increase in withdrawals. We're going to see people leaving a lot of these tokens. And over the weekend, we had a nice bloodbath in a lot of crypto altcoins, right? Why? Well, because a lot of people look at these altcoins and they sort of are waiting for them to pump back up after the collapse in November. And it doesn't always happen. There's always a thing called a suckers rally, and it sort of fades out. Wendy can get that in a second. I would think that most people are moving into Bitcoin, or they're going to move into stable coins and just withdraw entirely. Like I said on Friday, this is the lowest trading month, or one of the lowest trading weeks since 2019. And it's because there's regulators coming in the space. There's less interest in the space. Nothing innovating is really happening. Just not a lot of places to make money at the moment. Wendy?
So, Will, there are lots of places to make money, and it's going to be with Bitcoin, because we love Bitcoin ordinals and we love BRC20 tokens. Well, those systems are still pretty new, and they're kind of complex to use. I actually downloaded a wallet that's compatible with ordinals and BRC20 tokens over the weekend, as I wanted to play around with it a little bit. One of the people I was staying with for Decentricon and 3XP last week, they were all in on ordinals. So there is opportunities to make money. It's a lot harder. However, this is typical bear market stuff for me. And I understand that a lot of people are upset because the charts look all red. I made a really funny post like, oh my God, it's all going to zero. This is typical bear market stuff. Like, a lot of people see a relief rally and they're like, oh my God, everything's going to go back up. And that's not necessarily the case. And a lot of people start dollar cost averaging into things, or they start investing and buying, and they have no intention of taking profit. This is pretty standard price action. You're going to see a lot of these things happen, especially if there's poor fundamentals. The poor fundamentals I'm referring to is the actions by the SEC, because there's no legal clarity as to what's happening. Coinbase is one of the largest exchanges in the United States, and they provide a great service to people that are interested in getting into Bitcoin or crypto assets. And then Binance US got hit. There's all these terrible things coming out in the news. So of course it's going to cause a little bit of fear in the market. Robinhood is a mainstream company. A lot of people use that for traditional stocks. And the fact that they're in the news for delisting some crypto assets is going to cause additional fear. So this kind of makes sense to me. It checks out. And I just think that everybody should act accordingly and refer to your trading and investing journals and make a decision based off of that. And maybe tax loss harvesting might be a good idea for you. I don't know. Consult your local CPA.
Shout out to the CPAs in the room. That's awesome. We love the accountants. That's some good stuff. Yeah, I would think that like Robinhood and crypto is sort of like it's a bull market phenomenon, right? It's retail friendly. It's mainstream. It's easy peasy. So the fact that Robinhood entered in the bull and had great numbers in the bull and then has significantly steep drop off in the bear makes a ton of sense, right? It's a bull bear cycle thing. So this is even before the delisting of the tokens. I'm not sure that those 3 tokens that were named in the SEC lawsuit against Coinbase that they ultimately delisted comprise a large percentage of the crypto trading on Robinhood. I would doubt that they do. So this could even fall further down because some of those assets, which are limited in number on Robinhood already, are getting smaller. So anyway, this is like something that is happening. A lot of stuff is down 70 to 80%. Prices, trading volume, all sorts of stuff. Number of people employed in the space. Like, this is a big this is a big dip, but this is certainly part of the bull bear cycle that crypto is still very much trapped in, and maybe trapped in for at least another cycle before things get boring. The road to boring is looking more and more distant, by the way, as all this questioning of the industry comes into sharper focus here in the U.S.